Okay, I want to cover a couple things in this video. The first first of all, we're going to actually cover a couple intraday trades and how to execute these trades using pivot points. But first thing I want to answer is a question I got from a viewer in an email. I'll read you the question and then we'll go into describe the answer to you. I love your videos and the information you give. I'm currently a college student studying finance, and I'm very interested in stocks and the way they work. I just had a question, and maybe other people have the same question. It is how fees work whenever you buy and trade stocks. I see that you use interactive brokers, and I know that there are fees for trading stocks on a daily basis. What are these fees, and do these fees hurt people who only want to invest a little money or want to do a lot of trading on a daily basis? Thanks. Well, it's a great question, because to be a day trader, one of the more important tools you have to have is a good trading platform or a brokerage that's going to execute your trades and the fees that you're talking about are called commissions. And commission is what the broker charges you each time you trade a share of stock or a future contract, option. Any type of trading vehicle that you use in a brokerage, you're going to pay a small fee. Now, there's many types of brokers out there. There's like Merrill Lynch, Goldman Sachs, Charles Schwab, E-Trade. All these have different fee statuses. The bigger ones like Charles Schwab and Goldman Sachs, you're gonna actually get ripped on commissions. I mean, I don't know what the commissions are these days on these companies, but I figure, Goldman Sachs and stuff like that. If you're using Goldman Sachs or any big time broker house, you're gonna be paying like $30 a transaction, or I don't even know what it is. So $30 a trade maybe. So if you're doing a day trade, you're already down. $30 in, $30 out, depending on what the rules is. Because I'm not familiar with all the brokerages, I'm familiar with more of the day trading firms that have commissions set up for active traders, and these are the ones you're going to be looking for. Interactive brokers I have up here is a good example. Now, when you're dealing with a half a penny a share, minimum order $1 a trade. So that breaks down to, like, if you have 100 shares, you're paying $1. 1,000 shares, you're paying $5 a trade. So if you're trading 1,000 shares, you're paying $5. That's a big difference from paying $1,000 using a Merrill or an E-Trade, where you're going to be probably paying $20, $30 a trade. This is one of the best pricing structures I could find, and an excellent broker for day traders. So when it comes to the pricing, and does it hurt day traders, it being in and out, it doesn't really hurt me much, because the trades that I'm getting in, if they're going to be over $5, $10, you're already going to cover that in commission already. So most of your trades, you hopefully are going to be $100, $200, $300, even $50. You're going to cover your commission. So you want to get a broker who's a low commission that caters towards day traders. All right, so let's move on. I want to actually go over a couple trades today and show you how I trade the pivot points, and how you could actually trade the pivot points on intraday stocks. And my first example, I'm going to come up right now. Let me set this up for you. All right, my first example here is, remember when I trade the pivot points, I want to trade these stocks that I have a lot of what we call liquidity, stocks that have a lot of interest behind them, a lot of day trader activity, and it was something that they use the pivot points a lot in. So like the masses would tend to trade off of these pivot points. Now, as we see, and a good example here in Google, which I like to, anytime we have a gap off and a trade down to a pivot point, I always like to trade the first touch of a pivot point. And now the pivot point, remember, we discussed in pivot points in the previous videos, how the pivots are a set of group of support and resistance line, and then you have your main pivot point. You have support 1, support 2, resistance 1, resistance 2, and the pivot point, all calculated on the previous day's open, close, and open, close prices. And anyway, that's all a different video. What counts here is now I just want to show you this trade and show you how pivot points work with a stock like Google, which is runs on the pivot points good. Now, Google, of course, in this market makes swings. You can easily get a 3 to 4 point swing or balance. So if you're trying to trade Google and try to get a $50 trade on it or a $100 trade, it's very easily if you're trading 100 shares or even 50 shares. If you get 50 shares of Google and it moves 2 points, you got yourself $100 right there, and you could do this a few times a day. You start building up your account. All right, so as you see here, the market opens up at 9:30. We start selling off, and we come right down to the pivot point. Now, this pivot point is already calculated in here, so this pivot point is here. Why is Google bounced right off of here? It's because it's a pivot point. All right, you can see the reaction it has to the pivot point. It comes back here, stays above it. Now, what happens right when it breaks through it? We have a sell-off in Google. So right now we have a sell-off in Google, and the day goes on. We come back down, and all of a sudden we're down to resistance, or actually support number 1. We're under the pivot points of support number 1, and we bounce off support number 1. So we're bouncing off support number 1. Again, a perfect place to place a trade. If that's at 624, we're already bounced up to 628. It's already a 4-point move. And we come back down. We're trading in between now. But remember, each time it hits one of these pivot points, it gives you an opportunity to trade. If it fails to go through that pivot point, then, well, maybe the trade doesn't execute properly and you get out with a minimal loss. All right, we lose the pivot points in here because the chart opens up a little wide here. But as you see, we came right back down, and we bounced again right at the pivot points, even though we spiked down a little lower. Actually, I was in a trade right there. I went for that trade right there. Depending on your stop, you might not have got stopped out on that, but you could see the reaction it has to the pivot points. Then it broke through the pivot point, continued lower. Then we got a little choppy, trading around that pivot point. But as you see, each time the stock approaches a pivot point, usually have a trade. I'll give you another example with Apple here. Apple is another good stock and a highly followed stock. So, all right, so we have 9:30 open. We run right up to resistance line number 1. We have a hard time busting through it, so we pull back. We're back up there again. Off of it we come. All right, so again, if you want to short off the resistance lines, you can. So we pull back, and there we go. We're right down to support line number 1. We pass through the pivot point, and we bounce right off support line number 1. We bounce up. We get a two-point bounce off of this. We come, now we're above the pivot point. We're just trading above the pivot point, and we're coming back down. And that's a little choppy, but usually the first or second time we hit that pivot point or a resistance line, it gives you an opportunity to place a trade. So I just wanted to show you some of the examples in the intraday charts of how the pivot point and the resistance play a point apart here. You see how we're bouncing off here. So each time it comes to this area, you gauge the market. You could compare some other indicators to see if you want to place a trade here. It's down by the 165.50 area. You could get a bounce right up to the 166.50 area. Or you get 50-cent move on 100 shares. It's $50. 200 shares, 50-cent move is $100. Depending on your risk profile and how much you're willing to put into the stock on a stock like this. Now, remember, this is an intraday trade. This is true, just trading this stock on motion off of the pivot point, and this is one of the tools that figures on how I get in and out of stocks and where do I want to get in. I also use statistics also to time my trades, so we'll talk about that first. So I just want to go into that one more time and give an update on that, and hopefully tomorrow we're going to do a lot of these trades. So hope you enjoyed that, and I'll talk to you tomorrow. Hopefully this video didn't run over too much time.